But shifting focus from away from Siemens, which is down 9-10%, to what's happening with Arvind Smartspaces now, because Kamal Singal, the MD and CEO, joins us on the show. Kamal, hi, good afternoon. Thank you so much for making time and speaking with us. Well, after several muted quarters, the real estate sector has bounced back strongly, with FY23 shaping up to be a record year for most of the real estate companies. But the big question is this momentum likely to continue in FY24? Because there are a lot of headwinds, whether it's layoffs, whether it's interest rates. What's your guidance for FY24?
There has been a very great momentum in real estate in general, across the board, across cities, across geographies, across product segments. We have seen this sustainability like never before in the last few quarters and other years now. This time, the growth and the momentum seems to be quite sustainable compared to the earlier ones that we've seen in the past, mainly on account of the fact that it is primarily driven by end consumption. And whenever any rally or the momentum which is based on end consumption is generally more sustainable. So in our understanding, it's supposed to be much more sustainable. We've seen some great time in the last few quarters. And in our understanding, looking at how the economy is behaving, how the macros are, how a general interest in real estate as a product category, not only for investment as we just covered, but also mainly because of consumption reasons and general preference of people moving towards larger homes post-COVID, homes which are more secure, homes which are more open, hygienic, etc., etc. I think these are preferences which are now here to stay, and hence the rally and the momentum looks quite sustainable. You're right that there have been developments around Bangalore, especially the IT sector, where we've seen some layoffs and news like that. But on ground, we see that there are quite a few engines who are working, especially in a city like Bangalore, who is not only dependent upon IT. They have a very strong industry background. Industry is doing pretty well. They have a very strong service sector who's performing. So all in all, even if there are news like that when it comes to IT, I think the city is doing pretty well. The growth is very, very healthy. And the signs that we are seeing at this point in time are quite healthy and sustainable.
Kamal, if we look at the overall performance on a yearly basis, it's been pretty strong, a record year. What has caused the revenue to slip, particularly in the fourth quarter?
Sure. So there are two ways to look at the numbers in the performance. How we look at numbers is how we operate and how the operational parameters are behaving in terms of fresh sales, in terms of collections, in terms of volume growth, etc., etc. It's been a phenomenal quarter and the year. We grew 33% for the year as a whole. We grew almost in the region of 65%, 63% to be more specific. For the quarter in terms of fresh sales, etc. But the revenue numbers in the books of account have gone down, as you very rightly said. As we know that the accounting standard behaves and works more on a principle of project completion method now, which was not the case earlier. And the numbers which enter into our books of account basically is a function of how many projects and which projects get completed in a particular quarter. And hence, on a comparatively smaller base, we have seen that this year and quarter, we haven't completed any new project. And that's why the numbers in the books of account in terms of revenue, etc., are lower. But despite that, despite not having any project getting completed in the year, we have maintained kind of a very similar number in terms of profitability, profit numbers, EBITDA and PAT, etc. But when it comes to operational parameters, the performance has been great and it's been a great year for us.
Sure, point taken. But you also received a very good response to a couple of your recent projects as well. Talk to us about how the pipeline is shaping up. What could it add in terms of revenue?
Oh yes, we have a very, very aggressive plan for the coming year. Our investment initiative and program is very much on track now. We generated significant amount of money from operations. We have unutilized money lying under the HDFC platform, and the company, as we speak, is debt free. In fact, we have a negative debt of around 30 crores. So all in all, put together a combination of all these three sources of funds, we are carrying out our investment program right now. We should be investing in excess of 1,000 crores in this year. And that obviously is going to be strengthening our pipeline in a very significant way. As we speak, Bangalore is one of our major investment destinations. Last year, almost 60% sales from the overall portfolio came from Bangalore city, and this is how we are also planning to continue in the times to come. And of course, newer projects are expected. We have already committed quite a bit of money out of this overall investment plan into new projects. And in the coming days and months, we'll hear very soon in terms of the farmer project pipeline, which is expected to be announced soon. Currently we are having projects to the tune of 1,500 crore rupees of top line, which is expected to be launched in the next 2 quarters. But at the end of this investment cycle of around 1,000 crores, which is underway, we have a fresh pipeline plan to the extent of 4,000 crores to 5,000 crores. So all in all, this is what we should be seeing in the coming months in terms of new projects coming into our pipeline.
All right, Kamal, thanks very much for joining us on the show.